All right, welcome to this market analysis. We got the big one, the one we've been waiting on. It was ferocious, more ferocious than I think I would have anticipated. We spiked up quite high. We had talked about the breach of these levels and the potential move to the 200-day moving average, and we spiked right through it. I mean, just really opened up a lot of liquidity, spiked over 53.50 on average exchange basis, paused here kind of at the lows of the consolidation before the second leg of the breakdown in terms of where it finally wicked out on that secondary daily. Just huge moves. I mean, it paused for a little bit here in the mid 4Ks, but there was so much happening so fast. It was tough to follow. High volume, just a lot going on. I talk more about just this in a wide-ranging sense with Josh Olszewicz on the podcast that's going out if you want to get some additional insights. But I wanted to show just what should we expect now, because this went a long way really quickly, and we don't want to just FOMO in long just because it moved up. In fact, this has really moved to a lot of the target zones that we had addressed. We've talked about the top of the cloud. We've talked about 5,300 in Q1, moving to the 200-day moving average. These are all a big deal, and this is bullish. Don't get me wrong. I'm not at all trying to say that it's not bullish, because it is. But we want to have some caution to be careful in how we're going about the rest of this market. So I've posted this before, just the importance of the 200-day moving average. You can see I've also got the 20 and the 50 on here. We can take those off. So now we've just got the 200-day. This has ruled the bear market. It's been untackled until now. So that alone needs to signify how big of a deal this is. In the bull market, we never even got all the way to the 200-day moving average from a support basis. And when we broke above it, then you can see we went strong above it as we exited the prior bear, but then we did retest it and even go below. So basically, it's not a guarantee that you're completely out of the woods. In my opinion, it is a definitive signal of a change in market structure. But it doesn't mean that you're out of the woods when something like that happens. The history for Bitcoin, there's just not a ton of it, but on the various examples where we've moved above the 200, it has basically signaled the end of those bear markets. But it doesn't mean that there won't be moves down, retests, reversion to the mean, attempts to get people out. And plus, we're just not that far from pretty serious resistance. So that's what I want to caution today, which is this is a better time for profit taking than position taking from either a long or a short standpoint. If I was trying to create a long position here, then it depends on how you're looking at it. If you're looking at it in the sense of I'm buying because it's over the 200-day moving average, then you could look to get in back on the 200-day moving average. And I'll highlight, I actually think this retest 42 to 4,400 could go below the 200-day. And we could even close below the 200-day. But at a minimum, I think we will, at some point, retap the 200-day from the top side. And you need to be careful in terms of how you buy. If you're in cash, if you're looking for bringing more into crypto, kind of what you're watching for in that scenario. And I think what I would be looking for is I'd be worried if we make a lower low. So if we make a low, we want to make a higher low. So my stop would potentially be below this like 3,900 zone. Your entry here. This is how I might look for long-term positioning. As far as your upside, there's going to be massive resistance in the 6Ks. So like this would be a pretty conservative bet. Like I want to get in, but I want to get back out when it's, in the 6K range. And then I'll do a new position from the top side of 6K, 64, 7,000. Like if maybe you take your next long from 7,000 and you're just not a participant in this zone. If you're looking at it from a spot perspective, this is a pretty conservative trade. If you have the long-term hold potential, keep in mind this could take years, but you could say, I want to play it back to 12K, or you know what, we're in it. I think the market's bottomed. I've gotten a signal. Now let's wait until we reach and breach all-time highs. Obviously, these trades are way better risk reward, but keep in mind, new all-time highs and all that kind of stuff before you get too excited could take well past the next halving. We could be talking in 2020 before we are reaching a new all-time high. And when you think of it in terms of just general slope, it makes sense that such a thing could take a while. In fact, that might be an aggressive time for a new all-time high. So when you're analyzing, hey, do I want to be in? Do I want to be out? What's a reasonable stop? How do I want to look at this market? That's what I would look for. In terms of what I actually anticipate happening, this 200-day moving average is going to keep moving down. So it may end up aligning in terms of when we retest it. It may align pretty well with retesting the 42 to 4,400 zone. And then if you were to draw a line here, let's look at that level. Resistance, bounce off, and then support all the way that it broke down. 6150-ish. One of the things that could happen while people are clamoring for volatility and they're clamoring for new all-time highs, we want to be prepared for an extended additional accumulation range and kind of the next level up. And it may not look like this. It might, it might be a big ascending triangle or a pattern that's consolidating. In fact, one of the most bullish things that we could see would be an ascending triangle that does something like that. And that as a real definitive end of the bear market, getting the consolidation below. If we spike above, to me, it would be more of a liquidity thing. So we just don't stop and we spike really quickly. In that case, I actually still think we'd probably end up consolidating in some way afterwards. But if we were to consolidate for a long time below the 6,400 range, I think that truly could be the start to the new bullish part of the cycle. Right now, I would say we're showing significant signs of completion or lows being in. Recall, if we go back to our weekly, look at our weekly 200, excuse all these other lines that I have on here from the past. We touched the weekly twice. The weekly is going to probably keep moving up here. We could touch the weekly again, but maybe it's moved up here like in 2020. And I know that sounds like a long ways off. Just the type of thing I want you to keep in mind, that you don't, even after this, even after a big move like this, you really just don't have to super rush it. So in a long-term basis, that's what I'm looking at. I'm looking for what I would call like re-entry opportunities. So if you took some off on that move, if you're looking to take some off now, secure some profits, take it back to your bank, use it for something, whatever you have in mind. That's the type of thing that you could do while we're above, say, 5K and below 6K. I actually do think we've probably got another leg ahead. Like, I don't think we're really done on this exact leg. We might touch all the way on 6K, might touch 5,600, something like that. There's some different things that you can look at in terms of potential targets. The 50-week is one that's obvious. So that's around 5,700. I think that could be where we go on the next weekly, potentially even this weekly, but I kind of doubt that. That's the type of thing I'd be looking for. Our 20 SMA Bollinger Band midline was the signal that we were watching, and it's a signal that worked very well. Got the impulse move real soon after we cleared that. Another thing that you could be looking at is the cloud. So on the doubled weekly cloud, the Kijun is up here around 7K. If we spike above 6,400 because of some kind of mega liquidity crunch, that's the type of target that you could look at. And I know that seems strange, like you just cleared this massive resistance. Why would you stop here? But when you have those big liquidity spikes intra week, you could end up there and then maybe close the week back down here, 6,100, something like that. If we put the cloud on singled settings like this, note that that's where we stopped right now. We could very well end the weekly roughly in this region, around 5K, and look for a break above Kijun and find resistance along the cloud. Maybe we end up even riding the cloud down like this. These are the types of zones that we'll be looking at as we go forward. Notice, I mean, this is weeks and months. This is the rest of the year. This stuff is on our roadmap. One of the reasons I like the cloud is because it throws this cloud out there, 30 periods in advance, so that we have a lot to look forward to, and it shows us where resistance should occur well in advance. So we kind of see what's ahead. That's one of my favorite reasons to use the cloud. All right, let's dig into some lower time frame stuff. There's a lot going on. We want to be able to analyze, the current situation. Let's see, this is Friday, so let's go to the 7th. I think that is roughly where the weekly close is, if I'm not mistaken. Saturday, Sunday, 7 o'clock. Yep. So I've got this on where the weekly close will occur. Just note, we could ride this trend line into the end of the weekly. And if we breach this line, I say this line over this one because this was just so temporary. Whereas we've tested this one several times now. I actually anticipate in the short term, we'll probably fail it and touch back down, at least on this diagonal, maybe down here on this accumulation range. If we do that, that's also this 4634-ish, that's around what a 200-day is. That's actually pretty bullish to me. But I'm just keeping this diagonal here as a potential consolidation range to watch. So this is the type of thing that we're looking at on lower time frames. I anticipate by the end of the week, price will be around this zone, 4,900 to 5K. Unless it breaks this diagonal, then I would anticipate actually we close the week close to the 200-day moving average, around 4,700, a little below that even maybe. If we pop that to our system, you can see also this is giving essentially the Bollinger Bands a chance to catch up. If we put the actual Bollinger Bands on there, it will show us just how volatile that move was. Look how they went from super skinny to blowing out. And now the likelihood to me is these Bollinger Bands are just going to narrow, maybe tap the bottom band. So maybe this, 4850, that type of zone would be the place to look for some positioning along the diagonal, along the bottom band, constrained by the top band in this zone, and in the week right in here. I really like that look. I think that's a pretty good plan. We're riding the top side of the daily. I think that's super interesting. If we lose that this is a 4 hour. But if we lose that on these middle time frames, then, we'd probably get some pretty serious moves. But for where we are now, I mean, this is just blown out on the daily Bollinger Bands. I thought that was strange on that 4 hour. I say liquidity joke here because if we do lose that, that's when we retest this 42, 44, somewhere in there much sooner. But I kind of don't anticipate that we get all the way down there. But on the low side, low 4600s, high side, mid 4800s, and of course you can play both of those if you're trading on the lower time frames. That's the type of thing to look out for if you're looking to get back in. Those are where your risk areas are better. So for instance, you could stop out real tight on that diagonal and be looking for a move back to the all-time highs. Great potential trade setup. If you're going to be, significantly more conservative, you could look to get in above the 200, and again, look for a retest of the highs. It's a 15% move. If that happens on the new weekly or sometime next week to give you that opportunity to trade that, that's the type of trade that could work really nicely. That's Bitcoin. Huge move. Great opportunity to take some profit, see what's next, look for new opportunities. If you really dig down into the low time frames, you can see there is potentially a little more at play here. But this is pretty noisy. I mean, it's not a whole lot that you would take from that. By the time you watch this, it may be out of date. But yeah, so I'm bullish, but I'm watching out for potential retraces. The first two major ones were bought up really quickly. That may continue. Probably will. There's been a big sentiment change in the market. So that's what I'm looking at, and just want to make sure that I'm on the same page as all of you. Now let's dig into some altcoins, because they had some really fascinating moves. We may have seen an end of some of the direct correlations. I want to look at Ethereum. Ethereum versus the dollar was pretty, pretty similar, but a lot slower. So versus Bitcoin, it lost a lot of ground. We talked about this in the last video, the weakness here on the underside of this pennant, and you can see how it broke down. Even worse now is look how it is below that 200-day pennant. So my personal thought is that if you were to look for something short or something to be out of, to me, I just don't think Ethereum will outperform Bitcoin in a big way. The chart is pretty bearish. If I put the cloud on there, it's also at resistance in a bearish way. I just don't like that. Best case scenario, you could try to say it's some kind of Wyckoff spring or something. That's not something I want to worry with too much. I just know I want to limit my exposure on Ethereum, and if I was looking for shorts, I may look for them on this Ethereum BTC pair. If we look at other coins, Bcash went super hard. I mean, the percentages on this are just enormous. This is versus the dollar. This is back when Coinbase temporarily delisted it, and it almost filled that gap, which at some point I figured it would do. It may complete that. It did fill the gap on this BTC relative pair. This could be an Adam and Eve. It could consolidate here and move up further. I don't like Bitcoin Cash. I don't like to trade it. I think it's pretty scammy, but it's one to watch, and it's one that you can note just had significant moves, so it's worth paying attention to. Litecoin, just incredible. I mean, it had this weakness that we've talked about around 0.016, and then it really got punished by Bitcoin's move, but as soon as Bitcoin stopped, it popped. And this is a great example of the decorrelation effect that I've been looking for, which is a decorrelation of Bitcoin and altcoins, and an inverse correlation between Bitcoin volatility and altcoins. There's a ticker called BVOL24H. So this is the Bitcoin Historical Volatility Index. This is a BitMEX thing, and altcoins, I mean, it bottomed out here around 0.7. As that move occurred, it like 10x that volatility, and once it stopped, we started getting significant responses from some of these altcoins, but they really got punished on that volatile move up. You can see XMR, BTC, Monero, it moved up. It did the move that we talked about previously, and as soon as that volatility from Bitcoin started, it totally melted. Now we're looking for, can these moves continue, or are we going to look for them to fully retrace and essentially go back to jail? You can see Monero looks right now like it's back in jail. It's not one that I'm super interested in trading here. Maybe if I'd gotten a re-entry back down here, around 0.013, a little below 0.013, it would have been interesting. But now I'm not really going to be looking for it until I'm looking for an anticipatory breakout above the 200-day, or back down here maybe on the top side of the daily Bollinger Bands, something like that. But that's indicative of what we saw from several altcoins. You can see this one didn't respond as well as Litecoin, which is kind of classic for the way Monero has been in terms of underperforming some of the rest of the market. You can see ZRX similarly just got crushed after that. Alts were just working their way up, some more strongly than others, but they all pretty much got crushed on the way back down. Neo didn't get hit as hard. It had broken out of this range and it had one day down, but it got bought up quick. And notice it was one that responded really strongly off of Bitcoin calming down. This is a really interesting pattern for us because what it allows us to do is when we anticipate volatility from Bitcoin, so if it's really compressing, it allows us to minimize our altcoin exposure because the altcoin relative to Bitcoin prices should probably go down whether the volatile Bitcoin move is up or down. Just because it's volatile probably means the altcoins that we've been liking are going to have down moves. And then when Bitcoin either makes its volatile move down or up, then we can look for new exposure on those altcoin to Bitcoin pairs and look for new buying opportunities. With ENG, I had already re-entered a position somewhere, did not sell this move, which was a bummer. I think I re-entered here, did not sell up here. I was watching basketball. Pity to me because it got crushed. I doubled down my position here on the Bollinger Bands after the volatility. I still like the ENG strength. I like it to be back in this channel. So that's why I re-entered that position. Lots and lots of Bitcoins made, or lots and lots of altcoins made moves. Let's look at BAT because BAT had that forever breakout, just a huge one. This is the Binance chart, but it's close enough. Roughly Bitcoin all-time highs, 30-something% move up, made the low time frame measured move. This one is the high time frame measured move. And then when that move from Bitcoin happened, fully retraced it. And the reason was purely because it had moved so far, so fast that it had a lot of room to go down. Now, it would have taken some guts to buy back in to BAT here, although you did have some hints like this divergence. But it would have taken some guts to buy that retest, but that's what you got. What you could be looking for here now on BAT is potentially buying kind of the next step up, the next higher low, maybe around 6K Satoshis, and doing so in anticipation for a new move. Whether it's equal highs, I would actually anticipate breaching the highs and getting up there into 8K and above Satoshis. That's a pretty nice move potential. Even the equal highs, even a loose stop saying below that prior low. You're looking at a 22% move. If it takes the full measured move of the long-term breakout, you're looking at a 50% move. And remember, that's in relationship to Bitcoin. Something like that could take longer, could easily take a month to take that measured move because it took, well over a year to make the breach that level in the first place. But in that situation, you've increased your Bitcoin value of whatever you invested in this by 50% if it reaches that measured move. If it stops you out, you've lost 8%. It's important to go slow. It's important to look for good setups. That's what I'm trying to do. Tezos is another one. I got back in this one actually just yesterday. Let me put it on the right chart. Now, when I got back into this, I was pretty hesitant. I didn't do full size on my position, but there was a hidden bullish divergence potential if it was going to get that green candle. But if it went below these lows, I fully expected it to go to this box. So my risk was essentially having to wait for it to go into this box, back up before I even break even. That's why I went in with a half position on the chance that this played out, this divergence, and you can see the Stoke now too. That's why I went in with a half position with the opportunity to buy lower as well. So kind of multiple inputs on that. The other reason I liked this one is because it had a daily cloud situation on the doubled cloud where it was right on the top here. Again, I was prepared to buy more if it went lower. I was fortunate the trade worked out. A lot of fundamental stuff with Coinbase staking this and Binance saying that they're going to stake it. That's the type of thing that interests me in a project. I think a lot of the negative news for Tezos may have gotten priced in, so I was willing to take that a little extra risk. So that's why I played that one. I don't just want to talk about stuff that I've been paying attention to or I've been trading. But if you have requests, let me know. I'll try to include those. ADA is another one that, like Litecoin, got crushed and then just responded with such strength that it was really incredible to me. The other thing about ADA is this has now played out the entire head and shoulders pattern. This is just textbook pattern trading. You had a multi-month head and shoulders, and then you had the breach, didn't get a great retest, and that probably goes to show the degree of strength that this move had. And then this yellow line was the measured move. It breached that, and now you would be at the conclusion of your trade. Notice too, ADA is tired. Look at this RSI. Stoke is a little less relevant here. But if you were to look at this RSI, notice it's going lower at the same time this price has been going higher. This is not where I'm looking to take entries on ADA. This is where I'm looking to take profits. Does that mean that it can't go higher? No, of course it can go higher, especially if the rest of the market goes higher. But look, we're off the Bollinger Bands. We're way off the 50. The 200's way down here. I think the likelihood is that this one either consolidates or does some retracing, but generally underperforms other opportunities that still exist in the market. Once you get your trade, you want to keep your trade. You want to keep your profits. You don't want to stick around for too long. There's resistance here, 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 all these support areas that turned into resistance, especially here around 1900. And just look, it wicked right through that, couldn't hold it. So yeah, I'm just not interested in ADA. What I am interested in is stuff that hasn't done an ADA, but has a similar setup to an ADA. Simple Network Token is one that has a similar but imperfect setup. The left shoulder is a little funkier. This was a significantly higher range here, but it has similar risk reward, 20, 50, 200 day moving average, all down there. It's sustaining this level here that from before, making a higher low. This is the type that could be a good risk reward trade. This is fundamentals aside. I don't know the fundamentals, with a measured move up here to around 865. That's the type of trade that I like. Multi-month setup, could be a multi-month execution. It's the type that I could still get behind if I'm looking at. I want to point at Poly because it's one that I was watching. It's the one that I potentially liked. But what I see here is general weakness. So this is the 50-day moving average. It's below it. It's below the Bollinger Bands. It got soundly rejected off the 200. I was in this temporarily, and then I stopped out at some point. I don't remember exactly where. Thankfully, I wasn't in it when it dipped well below. This is not showing me strength, and I don't want to buy into weakness. I don't want to buy into something where it's on the verge of new lows and could very well go to new lows. It may not. It may go higher. It could be a good trade, but it's not a good setup. And that's why I'm personally staying away from one like this. So that's how I'm looking at different things. I'll also show XRP versus the dollar. I thought it might have had a little magnet to retest these lows. It's just really hard to do anything like that when the rest of the market is going crazy. So it actually moved to its 200-day moving average relative to the dollar because it had a lot of volatility here in the last day. But notice it really is still not showing strength versus Bitcoin. It's just bumping back into the Bollinger Bands just like it did back here, even while it was still going down. versus the Bitcoin pair, I'm still bearish on XRP because it still is just not showing strength. 5,200 bearish cross, 200 bearish cross, underside of the Bollinger Bands. This is not showing strength. To me, it looks ripe to underperform the market. That's the way I'm looking at that. There's a lot of opportunity in this market. So far, I think we're more in a profit taking or holding area on Bitcoin, probably holding from a spot position and just looking for new entries for other types of trades, and then looking for when our potential volatility could come to be able to inform us for altcoin trades. That's what I've got. Let me know if you have questions. I hope this was helpful, and we'll talk to you next time.